and welcome to an all-new episode where we will talk about the invaluable role of an investment advisor. If you are eager to enhance the performance and efficiency of your investment portfolio and are wondering how a knowledgeable investment advisor can guide you towards your financial goals, this video is for you. Today, we'll dive deep into the ins and outs and advantages of working with an investment advisor. And today we have Siddharth Paisora, who is going to help us understand everything about an investment advisor. So without further ado, let's get started. Thank you so much, Siddharth, for joining us today. How are you doing?
Thank you, Alina. I'm doing well. How are you doing today?
I'm doing good as well. Thank you so much. So the first question that I want to ask, and I think that's the basis of this entire conversation, I want to understand what exactly does an investment advisor do, and how can they help me, better my investment portfolio?
Sure. So let me take the first part of the question, right? So an investment advisor in India is often typically a SEBI registered investment advisor, and we call them as RIAs. It is a professional who provides guidance on financial and investment planning. They follow a client-centric approach, and they're bound by a fiduciary duty, which is essentially, but what it means is that you have to act in the best interest of your clients at all times. Fundamentally, an investment advisor helps you understand various investment options that are available in the market, such as mutual funds, equity, bonds, real estate, and many such other sort of asset classes. And what they do is to sort of guide you in selecting a mix that suits your risk tolerance, financial goals, and the overall time horizon that you're looking at. So let's say if you're looking at retirement planning, for instance, they will help you understand options like maybe an NPS scheme is worthwhile for your for your risk profile, maybe a PPF, or maybe there are different other investment mixes that you can follow up on. And they'll guide you through the process to accumulate enough corpus so that you have a comfortable retirement. There are many such activities that they'll come up with, including tax efficient investment strategies, how to have a risk managed portfolio, um, providing you with financial education so that you yourself are capable enough to understand the different nuances of the financial products that you're investing in, and have at least a basic to intermediate level of knowledge of that product, right? On the second point, which I think you asked me, was on specialized skills and what they bring to the table. Is that correct?
Yeah, basically, I want to understand how can they help me optimize my portfolio and what skills they bring to the table. Yes, of course.
Sure. Great. So great question again. So in that sense, an investment advisor obviously is a professional. They are, like I said, for an RIA, you have to be registered with SEBI. And what that means is that you have to follow up with the complex set of sort of tests and examinations that SEBI mandates. And post that, you get a SEBI certification. In addition to that, they need to have a certain skill set and certain amount of experience. So for instance, they'll understand the variance and nuances that are involved in terms of stocks, mutual funds, bonds, fixed deposits, derivatives, so on and so forth. And ultimately, what they do is to sort of tailor the recommendations to your goals and to the risk tolerance that you are looking and which you are comfortable with. The deep knowledge and understanding of the financial markets, what is trending in the market, what are the different regulatory changes that are happening. All of this is something that the investment advisor keeps you as an client updated on, and makes sure that they are making the most informed investment decisions to sort of help your portfolio sort of excel, in providing the necessary returns that you're looking at. In terms of sort of what other skills and activities that they do, let's say, they're looking at a lot of it is really focused on portfolio management, diversifying and optimizing your overall investments for the risk and return that you're targeting. And like I said earlier, they're also sort of very skilled at navigating India's complex tax laws. They have the relevant skills from a financial planning perspective. So if you have various goals, we can sort of accommodate for that. And obviously, they also advise and sort of give you counseling on, like I said, retirement, or if you're planning for your estate, for a will, so on and so forth. So that's the broad essence of it. Their overall expertise is obviously to help you achieve your financial goals, be it from a wealth growth perspective, or retirement savings, or tax minimization, or whatever sort of goals you're looking at.
Sounds good. I think that makes a lot of sense. And when should a person consider seeking or looking for an investment advisor? Are there signs that we should look out for?
Sure. Again, it's a great question. So let's go through a few scenarios where maybe you can look at whether an investment advisor is required or not. So one such scenario could be if you're new to investing and you find navigating in the Indian financial market specifically maybe a daunting task because there might be a lot of mutual funds to invest in, there might be so many stocks to look at. So if you want, and in that sort of space, it becomes very critical for you to get the right advice. Another such scenario could be, let's say, if you have a sizable portfolio, but don't have the necessary time. You have, you're working a 9 to 5, extremely sort of packed, busy schedule, don't have the experience all the time to sort of put into sort of analyzing the different asset classes that are involved. So all of this sort of comprises into, the fact that you should have an advisor who can sort of maybe optimize your portfolio for the financial goals that you're trying to achieve. People can maybe, people tend to sort of sometimes not accumulate enough savings or enough assets, so to speak. And a lot of that can also be attributed to not having the right saving discipline or the investing discipline. And an investment advisor can definitely help you achieve that sort of discipline as well. Another such scenario could obviously be, like we mentioned earlier, retirement savings or any specific goal that you're looking towards, right? Like, for instance, significant events in a person's life are typically childbirth, a marriage event, maybe a home purchase, maybe a car purchase. So all of this can be very well planned out, and there can be a full reevaluation of all of these financial goals and investments over a period of time. And this is where an investment advisor really can sort of provide that valuable insight that you as a client might be looking for as well. And maybe like a final scenario that we can sort of think about is people who have experienced a lot of financial losses, maybe because they've had, obviously it can be luck based, but it can also be maybe they don't have the right expertise or the right set of advice that they're getting. And in that sense, an advisor can come in and they can sort of identify what are the recurring mistakes that a person might be making and how you can sort of rectify those. So to summarize, you can also look at maybe, let's say, complex matters such as real estate planning or tax implications, the various specialized skills that we're looking at. All of that sort of, if you put it all together, that's the sort of guidance that a financial advisor or an investment advisor, so to speak, really brings to the table. And then I think last point that I'd love to make here is, ultimately it's not about how much money you make, you have, sorry, but it's making it work best for you, right? It's about whether you are able to sort of rely on that investment advisor to give you the advice that is dependent on your specific situation and your goals that you're trying to achieve here.
Sounds good. And that makes a lot of sense, Siddharth. Basically, in every stage of your life, a financial planner can help you in some way or the other.
Absolutely. I think you put it correctly. Yeah.
Right. So I've also heard about this statistics where it says that almost 70% of adults working with a financial planner feel prepared for a recession compared to less than 40% of adults who aren't working with an advisor, which I think
wow. Yes.
speaks volumes about this scenario.
Absolutely. I think those stats speak for themselves essentially.
Yeah. Now that we're talking about investment advisors and how they can help us, can you also help us understand what are the different kinds of services that they provide?
Sure. So let me try and summarize. And again, I'll keep it in relatively, simple language here. So investment advisors typically provide a broad range of services. Firstly, we can look at obviously the personalized investment advice that they can provide, that can help you create these very tailored strategies based on your own financial goals and the risk tolerances that you are sort of acceptable and that are sort of appropriate for you. The second is, for instance, they provide obviously portfolio management services. Obviously, this is a separate class of investment advisors, so to speak. And what they do is obviously to actively manage your portfolio or your investments and ultimately optimize the returns and help you sort of minimize that risk from a portfolio perspective. The third thing that they can obviously help you do, like we mentioned very early on as well, is retirement planning. Now that's a very important component in a person's life, and people should be planning for it from a very early stage, because obviously compounding is something that really helps you as you grow in your career, in your sort of personal life. And having that sort of corpus being built from a very early stage can help you support the lifestyle that you might be targeting when you're 60, 65, 70, or whenever you sort of plan to retire. Fourth, I think, is from a tax planning perspective, they have the relevant set of skills and expertise, and also a broader team that really helps you leverage the type of investment instruments where you can maybe minimize your tax liability under the Indian tax laws, while ensuring you're still hitting the relevant or necessary returns that you're sort of targeting for your overall investment portfolio. And finally, like we mentioned earlier, estate planning services. It's something that a lot of people may not necessarily think about. And as humans, we tend not to sort of think about death as often as we should be, maybe. And estate planning services is something that everyone should really sort of think about and really start preparing for once you have that sort of necessary capital base, and how you can sort of distribute your assets onto your sort of children or spouse, or whoever you want to sort of distribute your assets to. So those are the 4-5 broad range of services that an investment advisor can sort of help you with.
Okay, now that we've talked about the different kinds of services that we get from investment advisors, can you also help us understand what are the different types of investment advisors that we should look at, and how can I identify which one is the right one for me?
Okay, sure. So let's take the first part of the question, the different types of investment advisors that might exist in the market. So the first one, like you mentioned earlier, are the registered investment advisors. These are people who are registered, or firms that are registered with SEBI. They provide investment advice and ultimately will follow a very high standard of professionalism and ethics, given that they're bound by SEBI and have a very strict regulations surrounding them. The second set of people that we can sort of look at are mutual fund advisors. They recommend the best mutual funds that you should invest in, and ultimately it depends on your own sort of risk profile and your goals. And the way that they would earn, the way they would earn commission from the assets that they're sort of recommending to you, that is the sort of revenue that they take out of the overall system. The third here is portfolio management services, who cater to high net worth individuals with tailored investment strategies and manage individual portfolios. And the fourth, which we can sort of probably deep dive into a little bit later on as well, are Robo Advisors, who are digital platforms offering automated algorithm-driven financial planning services with minimal human intervention. So they analyze your financial situation and give you sort of standardized goals that you're targeting. They'll provide sort of advice or way for you to automatically invest your assets into those goals. And finally, there are financial planners who provide comprehensive financial advice and create plans for long-term financial objectives. They might specialize in specific areas of risk management, retirement planning, or tax planning, but that's the essence of it. They provide you the sort of overall vision of how you should try and achieve your long-term objectives. And obviously, each type of advisor has its own strengths and considerations that you should take into account. And to choose one that would be best for you or most appropriate for you ultimately comes down to the financial goals that you have, the risk tolerance that you're sort of comfortable with, and the complexity of your overall financial situation, right? So to answer your second question here, which is to sort of how can you identify the right investment advisor? So there are a few points that we can sort of consider here. Like I said earlier, the first point is obviously your own financial situation, how well you understand it. You should consider your own financial goals, your financial situation, the desired involvement that you want from the investment advisor. So for instance, maybe you're saving up for a retirement, or you're saving up for a house. Do you have high net worth? Do you have a high net worth bank account? Do you have a large sum of investments, or are you just starting out? Do you prefer someone who's very hands-on with you, or do you prefer someone who's a little bit hands-off from you, right? So all of that really comes into understanding what you are comfortable with, what is your own individual financial situation, and thinking about that. The second maybe step here is to look at and research a few investment advisors And obviously, if you're going for an investment advisor, you should typically go for a SEBI registered investment advisor. And you should understand what is their investment philosophy, what are their experiences. You can look at various client testimonials that are available on different websites today. Um, in some cases, they may also have listed their portfolio on specific websites such as Small Case, or on their own website. So really doing a sort of due diligence of what is available and what is out there is very important. The third point here, obviously, which is very critical for you, is to look at and understand the fee structure that is involved. They may charge a flat fee. They may charge a percentage of the overall AUM that you've invested with them. It could be an hourly rate, maybe for a financial planner, for instance. So all of this really depends on the type of investment advisor you're going for. But understanding this is very critical to the returns that you're looking to sort of achieve. Ultimately, the right advisor for you understands your needs, offers services that match your financial goals, charges fees that are within your budget, and ultimately makes you confident in your financial future.
Makes sense, makes sense. And I see that you've talked about a lot of different kinds of advisors and how they can help us better. But one thing that clicked here with me was a digital investment advisor or a robo advisor for that matter. So can you help us understand more about that? And is there an option that I can consider?
So a robo advisor obviously offers an accessible and simple investment route that often requires lower initial investment capital requirements compared to a traditional advisor. They're great for straightforward financial scenarios like retirement planning or something where you have a goal and you want to sort of invest towards it. So a robo advisor can obviously be very useful in that scenario. You could also consider maybe a hybrid approach that looks at both robo advisory along with maybe a human advisor for maybe a more nuanced advice. But robo advisors right now are trending, and obviously, Wright Research itself has its own robo advisory services here. Um, Overall, obviously, you should always be very careful and always ensure that the platform that you're choosing, whether it be a robo advisor or a SEBI, an RIA that you're looking after, you're going after, you should always ensure that they're SEBI registered and you understand what is it that they're offering and what are the necessary fees that they're offering before you sort of invest with them, obviously.
Okay, sounds good. So you mentioned about the fees in your previous answer, and here also you talked about that, less capital is involved when you go ahead with the robo advisor. So can you help us understand more about the kind of costs that are involved when we, speak to a financial advisor and when we take on their services?
Sure. So investment advisors fees will obviously vary with the structure, depending on what you're trying to achieve and what type of advisor you're trying to go after. SEBI, I think, has a regulation cap where the fees are capped at about 2.5% of the assets that are under advice, or a maximum of about 1.25 lakhs on a per annum basis, right? The exact fees that you are looking at will obviously depend on various factors, such as the advisor's experience. So a more experienced advisor may charge a higher amount. The type of service that they're giving you, maybe someone who is more involved with you on a hands-on basis may charge typically a higher fees. And obviously the complexity of your financial situation, right? So the more complex it is, typically the charges will also sort of go up. Advisors that maybe be that are fee based and are charging a flat or an hourly rate for advice is one model essentially. Another one is where they sort of earn from commissions. In the sort of RIA space, you are not allowed to obviously do both providing the advice and earning commission from the financial product you're selling to your client, and that's something that SEBI has mandated and has regulated very strictly. But from a broader perspective of investment advisors, you can charge, you can have an advisor fee on a fee-based basis or on a commission-based basis. If they manage a portfolio, like we mentioned, portfolio managers earlier, they may have additional portfolio management fees as well. And that's something that, depending on your situation, you'll have to sort of do a little bit more deep dive into. From a robo advisor perspective, these guys obviously have much lower fees and typically can either be a flat fee based model, which is something that we at Wright Research have followed, or it can also be a percentage of the assets that are under management. And typically this can be somewhere around 0.3 to 0.5% of the assets that are under management. Ultimately, I think my final advice on this point specifically would be you should understand all the costs that are involved before you work with the advisor that you are sort of selecting. Always ask upfront clearly the overall fee structure, and try and understand the different components and how the advisor is being compensated, and ensure that this entire fee structure that you are getting is something that aligns with the service level that you're looking for and the overall investment advice that you want to receive.
Okay, makes sense. So, here is a follow-up question on this. So you mentioned about the different costs involved and how, SEBI-regulated ones are based on commission and the others are mostly have both, either commission-based or, flat fee structure. What, according to you, is best for a person who's just starting off with a financial advisor? Should they consider one that's commission-based or a flat fee structure? Sorry.
So in that specific scenario, I think it really depends on, again, your own investment goals. But a general advice here would be, if you are just starting out and you have a very minimal sort of investment amount that you're going in with, a flat fee model is typically what you might be more comfortable with, because as you start, you may start investing a little bit higher if you get that confidence. A percentage-based model is typically reserved for a much higher minimum investment amount, and it's something that's not typically offered for the smaller investments that people might make. So again, broadly speaking, you should obviously go for something that is appropriate at your investment advice, at your own investment goals, what sort of financial goals that you want to target in the future. But broadly speaking, the advice here would be probably just look at a flat fee model, because you know exactly what you have to pay, and you know exactly what you can sort of assess that and benchmark it against what you're going to be getting in the future.
Okay. So now let's talk about a little more on what an investment advisor can help us with. So can an investment advisor provide guidance on asset allocation and rebalancing strategies to maintain the optimal portfolio mix?
Absolutely. Investment advisors play a very key role in guiding you on, let's say, asset allocation and the rebalancing strategies. They can divide your portfolio among different asset categories like equities, bonds, cash, balancing your overall risk and reward according to the goals that you are probably looking at, the risk tolerance that you are sort of comfortable with, and the overall investment horizon that you're looking at as well, right? They can also guide you on portfolio rebalancing, which is ultimately what that means is you're trying to realign your portfolio weights to maintain the desired risk levels. So let's say, for instance, if your initial asset allocation was 70% in equities and 30% in bonds, and equities are performing well, raising that allocation to, let's say, 80% because they performed well in the market, the advisor would sort of give you a guidance and help you get it back into the rebalancing, into the 70% of equity split and 30% of bond split by rebalancing it and bringing it down, right? And that's very important because you want to keep your portfolio aligned to the overall asset allocation that was defined for the investment objective that you're sort of going after. So yeah, investment advisor very instrumental in creating and maintaining an optimal portfolio mix. So through intelligent asset allocation and rebalancing strategies. From a robo advisor perspective, a lot of this gets taken care of automatically because the robo advisors obviously has that necessary automations built into the system. But yeah, on an overall level, this is how you sort of go about rebalancing and helping you out with the portfolio allocation mix.
Makes sense. On that note, can you also help us understand how does an ongoing monitoring and performance evaluation play a role in optimization of a portfolio with the help of an investment advisor?
Sure. So investment advisors don't just set up, the initial strategy that you are sort of going to target. They also help you consistently track your portfolio's performance against the goal that you're going after, the market, or a benchmark that we can sort of fix and understand how well or how poorly your goal is being met. And this ongoing monitoring is very critical to identify any significant performance deviations, which could happen, let's say, due to market volatility, economic changes, or shifts in specific investments, right? Performance evaluation obviously offers insights into your portfolio's effectiveness. It identifies what's working and what's not. If an asset class or an investment consistently is underperforming, it obviously means that we need to start looking into it and sort of deep dive into whether we want to stick with it or whether we want to sort of remove it from the portfolio mix. And this continuous evaluation is something that the advisor once has the necessary skill for and has the necessary time and obviously has the team and resources behind him to be able to help you adjust your strategy, possibly reallocating some of these assets, adjusting the overall risk profile, and ultimately maybe even changing some of these investment instruments that are in the portfolio, right? These regular reviews also sort of accommodate for any changes that you may have. So let's say if someone was recently hired in a new job, you have a much higher income band now. So how can you sort of realign your overall financial situation or your financial goals is something that the investment advisor would obviously look at as well. So in essence, yes, ongoing monitoring and performance evaluation ultimately provide this sort of a very positive feedback loop where the investment advisor is optimizing your portfolio with the sort of evolving goals that you may have and the overall market dynamics that are at play.
Yeah, sounds good. And I think the final question here would be on tax implications and how an investment advisor can help us, navigate that. So can you help us understand that better?
Sure. So I think this is a very pertinent question. There are, tax efficient investing is obviously, like we mentioned very early on, is a very key role that an investment advisor can provide guidance on. They understand the different investments. So they understand how different investments carry distinct tax implications. So for instance, long-term capital gains apply on equity investments that are held over 1 year. For short-term capital gains on debt funds, typically the limit is up to 3 years. So advisors can guide you on all these sort of tax implications that your portfolio might hold. In addition to that, they can also come up with very unique strategies such as tax loss harvesting, which is where you offset any capital gains tax liability that might be incurred on you. They can also advise you on choosing, let's say, between various tax saving instruments, which today are available in the market. So for instance, ELSS, PPF or NPS, which all provide, different, which are all providing tax, rebate under Section 80C and have a deduction under the Indian Income Tax Act. So yeah, so they can also explain the various tax implications, that are surrounding your overall portfolio, which might involve selling investments and incurring those necessary capital gains taxes. And while tax planning isn't the sole driver that you should be looking at when you're making investment decisions, it is definitely very crucial when it comes to trying to optimize your returns, because post-tax returns is what you will get into your pocket, right? So yeah, an investment advisor can help navigate these complex tax matters, and they can ensure you maximize your after-tax returns which can align to the investment objectives and the risk tolerance that you are comfortable with.
Okay, that makes a lot of sense. And I think everybody wants to navigate taxes very efficiently, and that would definitely help everybody a lot. So thank you so much, Siddharth, for all your valuable insights on investment advisors. And I think everybody out there would now have a lot more clarity on investment advisors. So thank you so much for that. And to everybody out there, having the right investment advisor by your side can make all the difference. So please do not hesitate in reaching out to an investment advisor and exploring how an investment advisor can help you in your investment journey. Do not forget to like this video and subscribe to the Wright YouTube channel. We will be back with many more such insights on financial planning and a lot of the topics. Till then, click on the bell icon below to stay updated with everything that Wright posts on YouTube channel. Thank you so much and happy investing.